Hello Graham, and welcome to Blue Notes to talk to us about the second submission from ANZ into the financial system inquiry. At the heart of this submission is the debate over levels of capital. How do we know whether the system has enough capital? Are we going too far with capital to make the system more resilient?
Yeah, I think we said in the submission that we've seen a material strengthening of the sort of level of capital and a level of system absorbency, loss absorbency since 2008. And I think what we're saying is that that process is still underway. There's still a transition going through, and it'll take till about 2019 for the current measures to be fully implemented, and that they will have a significant strengthening effect across the system. So we're sort of arguing that at this stage we think more capital is unnecessary, and it actually would come at a cost to the economy. So we think there are other ways that you could improve resilience without necessarily increasing the capital, and that would include, improved stress testing, looking at pre-positioning for stress events, etc.
ANZ discusses in this submission the notion of bail-in capital of being preferable to ever higher levels of core capital. What's the argument behind that?
Well, it costs more money, either in capital or one of the alternative ways of improving loss absorbency is through the concept of bail-in, which would be bailing in debt investors and converting that debt to equity. All of that would mean that the cost of funding the bank would be higher, and that would get passed through to borrowers from the bank.
Well, thanks very much, Graham, for talking to Blue Notes.
Thank you, Andrew.